Financial independence with a self-directed IRA. Hey everyone, Adam Bergman, tax attorney and founder of IRA Financial. And on today's Adam Talks, how a self-directed IRA can help ensure financial independence and help you guarantee a better retirement savings nest egg. And my belief, and this goes along with the belief of one of the greatest investors in the history of the world, Warren Buffett, is the following. Invest in what you understand. Okay, pretty simple. It's one of his three principles of investing. The other two are look for businesses with a moat and buy quality when it is marked down, which is the beauty of, for example, Roth conversions and taking advantage of the power of the Roth when you can convert at low prices and take advantage of tax-free gains in the future. But the third principle, and I think the most important one, is invest in what you understand. And the reason is you're probably going to be more interested. It's probably going to make more sense to you. And I think you'll definitely be more engaged in the investment. And that's what really attracted me to the self-directed IRA industry. When I've told the story multiple times in the past on this podcast and on videos, but I'll say it again for any listener who hasn't heard it. I was a 8th-year tax associate at a large law firm in New York City, law degree. I would say I went to university. I have a master's in tax law. Pretty educated guy from a tax standpoint, worked on hundreds and hundreds of partnership corporate deals, did a lot of very advanced tax planning, structuring, tax controversy work. And I was asked by a partner I worked with to research whether someone could use their IRA to invest in a hedge fund they worked at. And I remember thinking, probably not, right? I thought that you had to buy stocks or mutual funds or ETFs with your IRA. I doubt the IRS will let you buy real estate or hedge fund interest with your IRA. I assume the answer is no, but let me just kind of dig around and do some research. So I remember this is back in like 2008. So there was actually a library, right? Law firms had libraries back in the day, and they actually devoted a lot of real estate to libraries. So there was a tax library, and I remember going to, they had what's called tax management portfolios, like TMPs. Basically, again, this is not going on to Google and searching. I actually went to, they were like booklets of and hundreds of booklets on various topics. And there was one on retirement accounts, IRAs. I remember examining and researching under 4975 prohibited transaction rules and saying to myself, wow, oh my God, you can do this. You could actually, assuming this person was going to be under 50%, and going to pay fair value for the LP interest, the limited partnership interest, they could use their IRA to invest in their hedge fund. And I was just blown away. And I remember thinking to myself, how does no one know about this? How is some of the tax partners I work with that are 50 times smarter than me, my colleagues, myself, I think I was pretty smart, educated tax lawyer, worked at some of the largest law firms in the world, master's in tax law, law degree, never heard about this. And what really attracted me is obviously the power of the retirement system, that folks can use their retirement accounts to defer tax and potentially even shelter tax with a Roth IRA. But what also really engaged me was freedom. That, hey, the IRS is not limiting you in the broader terms to what you can do from an investment standpoint. And this resonated with me because, yes, I own stocks and mutual funds and ETFs, but I follow the stock market, but I'm not one of these people that are, on CNBC all day checking the markets, the S&P 500, where the stocks are going. I'm not an active trader. It just doesn't gravitate towards me. Like, I'll invest in equities because I think it's important to have equities in your portfolio, but it just doesn't get me. For some reason, owning shares in Apple, like, just doesn't excite me. Like if I invested in a private company that I actually had a little bit more involvement in, or real estate, which I really like. We're doing hard money loans, which I know who the borrower is and I have more control and I like the returns. I can estimate the returns better than if I just bought stocks and held it. That's just me, right? There's millions and millions and millions of Americans that feel differently. That's fine. But the beauty of the retirement system and how it was devised in 1974 by ERISA is Congress gave us all the opportunity. So the tax code doesn't say what you can do with your IRA. It only says what you cannot do. And there's only three things you cannot do with your IRA. Can't buy life insurance, that's under Section 408. Can't buy collectibles like art. There is a special carve out for precious metals like gold, silver, palladium, bullion, American Eagle, state minted bullion coins. Those are not deemed collectibles. They can be purchased with a retirement account, but must be held in the physical possession of a depository, of a trustee. And then the third broad category of prohibited transactions is found under 4975, which I just previously mentioned. And essentially what it says is you cannot engage in any transaction with your IRA and a disqualified person that directly or indirectly personally benefits the disqualified person. And a disqualified person is defined under 4975E2 as the IRA owner, right? Me, my lineal descendants, my parents, my children, my spouse, daughter-in-law, son-in-law, or any entities controlled 50% or more by such persons. So brothers, sisters, aunts, uncles, cousins, friends, neighbors, those are not disqualified persons, and you are allowed to transact with such persons. So when it comes to financial independence, I don't think there's a better place than the true self-directed IRA. Now, when I say true self-directed IRA, I mean a true self-directed IRA, because if you go to Schwab or maybe even Fidelity, they're going to market that they will offer you a self-directed IRA. I've seen it. It's on their website, but it's not really self-directed because all they're letting you do is buy the investments they sell. And that's their right. They're in business to make money, and that's their right to do. And they can do that. However, that's not truly a self-directed IRA. A real self-directed IRA is what IRA Financial and other companies in the alternative asset space work with. Those are IRAs that we will custody that let you do everything, not just what is marketed, because we don't sell assets. That's a very big distinction between a true self-directed IRA provider like IRA Financial and a financial institution like Fidelity that says they're offering you self-directed IRAs, but are not going to let you buy a home, an Airbnb, or invest in your friend's business, or do a hard money loan, or buy precious metals and hold it physically, or do tax liens or tax deeds, or invest in private equity, hedge fund, venture capital, deals that they do not market or offer on their platform, right? So it's not really a self-directed IRA. It's basically a closed-end self-directed IRA, meaning it's self-directed to the sense that it's closed in on what you can buy. So you can buy anything they sell. So clearly it's self-directed, which is ridiculous because every IRA investment then by definition is self-directed, because it's not like you appoint a trustee of your IRA who then has full investment discretion over your IRA. That doesn't happen. In fact, the rules are very clear under the IRS rules that you cannot just give up fiduciary responsibility of your IRA. You can't just go to someone and say, hey, just invest my IRA, do whatever you want to do. I don't care. You could do that, but you still technically are deemed the fiduciary of your IRA. So the fact that a Fidelity, a Vanguard, or Schwab will say, yeah, we'll let you do a self-directed IRA. Here's your choices. Have fun. It's self-directed. Of course, that's like any brokerage firm. What a true self-directed IRA is gives you the true financial investment freedom to really invest in what you know and trust, right? So if you don't understand AI chips, like you don't want to buy NVIDIA, and you don't want to buy the S&P 500, and you don't believe in the Magnificent Seven, and you just feel better doing hard money loans to people you know, or investing in real estate deals, or buying a house and just renting it out, the tax code lets you do that. ERISA lets you do that. Section 408 and 4975 let you do that, right? So that is how you secure financial independence. If you really, really are interested in true financial independence and really want to follow Warren Buffett's principle of investing in what you understand, then the self-directed IRA is the ultimate solution to do that, because it really broadens the scope of what you can invest in. It's not going to limit you to just publicly traded securities or publicly traded bonds or mutual funds or ETFs. It's going to let you do anything you can imagine that's somehow not life insurance, not a collectible, and doesn't involve or personally benefit a disqualified person. So if it's buying, land in Guatemala, well, not to say you should do that, but I'm just saying you have the ability to invest in what you know and trust, right? You may just feel good owning a piece of farmland in Texas, or doing a hard money loan to someone in Maine. Whatever it is, the tax code gives you the freedom to do it. And if you truly want financial independence, there is no better way than with the self-directed IRA. And you just got to remember that not all self-directed IRAs are the same. You may be told that you have a self-directed IRA with a traditional brokerage firm, but it's a closed-end self-directed IRA because you're only allowed to invest in what they offer. A true self-directed IRA company like IRA Financial, we're totally agnostic and totally neutral in what you invest in. We don't make money by selling investments, right? We don't give investment advice. We don't market investments. We don't sell investments. We're not allowed to under FINRA and the SEC. And you know what? We don't want to. That's not our strength. Our strength is expertise, custodying assets in the alternative world, record keeping them, providing you tax consultation, tax filings, tax reporting, and helping you optimize from a tax standpoint your retirement savings. We'll leave the investment advice and the marketing to those other brokerage firms. That's what they do. What we do best is we'll focus and allow you to engage in, use the tax code and all it offers and optimize what the tax code allows you to do, which is more than just publicly traded securities. Okay. If the IRS only wanted you to gain financial independence through investing in publicly traded securities, they would have done it, right? They would have limited and clearly said in the tax code, IRAs can only buy publicly traded securities. Right? Very easy to do, or publicly traded investments. They didn't do that on purpose because they understand the importance of financial independence, financial diversification, and they want to allow us, to their credit, to invest in more than just publicly traded assets from a pure investment and diversification standpoint. And it's something, again, that satisfies one of the three Warren Buffett principles of investing, of get to invest in what you understand and not necessarily just invest in companies that are publicly traded, which you get, like maybe you don't get AI, but maybe you like Coca-Cola, so you should invest in Coca-Cola. This is bigger and broader. We're not back in the 50s and 60s. Like there are now more bespoke, exotic investments that in the alternative world that have proven very reliable and very successful, like private equity, venture capital, real estate funds, credit funds, hedge funds, tax liens, tax deeds, cryptos, private business, founder stock. There's a lot more than just sitting back buying Coca-Cola and selling it in 60 years, right? People are doing a lot more. They're more sophisticated. The internet's opened up a lot of windows and opportunities to people to learn more and be more educated in different investment products, which is, again, the beauty of the self-directed IRA. I always say, I don't have to market the product. It sells itself, right? If you're someone that really cares about financial independence, wants more control, wants more freedom, wants to have the ability to invest in different things that are just not publicly traded, then you're going to need a self-directed IRA, a true one. Why? Because Fidelity, Schwab, Vanguard, they're not going to let you do it. It's not going to let you do it. So you have no choice. You're going to come to me. And that's why I don't need to beg people. And that's why we're always the first to tell people, hey, this isn't a good investment for your IRA. Don't do this. Maybe you should use personal funds. For example, the investment's going to trigger UBIT, unrelated business income tax. There are certain real estate transactions that are better done personally, just like oil and gas investments. We'll be the first to tell you. Why? Because there's so much demand for this product because it sells itself that we don't need to be sleazy and try to sell a product to someone that they don't need, because there's 100 people behind you that really need it and want to do it. And then there's only, so much time of the day that we can engage with people and help them. So it's a great industry. It really unlocks financial independence. And it's the only solution that truly, if you care about your freedom of investment, your independence, your ability to diversify, this is the truest and most real way you can do that in the confines of the tax code, being able to invest in assets you know and trust tax efficiently, whether it's tax deferred or tax-free in the Roth IRA, and using the tax code to your advantage. The self-directed IRA is the ultimate solution for you. So that's it. I just wanted to kind of poke that bear again. Sometimes it's good to just remind everyone that, hey, this is out here, right? If you really want control and freedom in the retirement accounts and are just tired of just only buying publicly traded securities, really now the magnificent, it's not even the magnificent seven, it's really the big four, right? With Tesla being down, there's really 4 or 5 companies, people invest in. It's not that exciting. Like I give what I do with my kids, if they do well in school every week, I give them between 20 and 30 bucks a week, and I let them go and buy stocks. Okay. But honestly, over the last 6 months, they've been buying the same stocks over and over. There's a limited amount of stocks to be purchased. If you look at the number of publicly traded companies from 1996 to today, there's 40% less publicly traded companies today than in the mid to late 90s. Companies aren't going public as quick as they used to for whatever reason. And most of the consumers are really just buying 5 to 10 stocks. Forget about the Russell 2000, which are like mid-cap stocks, smaller companies, still big, but smaller in relation to Amazon or NVIDIA. Those are for more advanced traders. The average investor like you and me, there's 10 or so companies we're buying. But after you get over those companies, you're like, I need diversification. I can't just put all my money back into NVIDIA or Amazon or Tesla or Meta or Google. Or I just need to do more. I need to do something. And I'm not really excited by some of these other publicly traded options. So, hey, maybe I want to do a private company or a unicorn that's private, or I want to do a hard money loan, or I just want to buy real estate, or I want to do a real estate fund or a hedge fund or a private equity fund, credit fund. There's so much you can do, or precious metals or cryptos, whatever it is. It's a huge world of investment opportunities. And you don't have to be relegated to a very, very small corner of the investment world. You can broaden your investment horizon with the self-directed IRA. So I hope you guys enjoy the podcast. I truly believe in the power of the self-directed IRA. It may not be for everyone. I get it, but it's important to know your options. It's in the tax code. The IRS lets you do alternative assets, even though Schwab, Fidelity, Vanguard may not want you to know that. It's true. It's been around since 1974. As IRAs were created, Congress did not distinguish between traditional and alts. It just said, hey, you just can't do life insurance, collectibles, and 4975, the self-dealing transactions. Otherwise, you can do it. Okay. It's just the internet has started helping people view this, see this, and understand it. And now every day, more and more people are joining the self-directed retirement nation because they just want more financial independence and more freedom. And of course, control in a very, very tax efficient and tax advantageous manner. So again, really appreciate you hanging out with me today. I hope you enjoyed the podcast. If you did, please give it a rating and a good review. The higher ratings, the more it gets boosts under the algorithms, more people get to listen to it, more people get to learn and can join the self-directed nation. And because again, the retirement system, I'll say it again, it's not a zero-sum game. We all could be tax-free millionaires at retirement. It's not like only 50% of Americans can do it. We all can do it. We just need to understand how the rules work. And that's my job and that's my passion. So thanks again. Have a great day, and I'll see everyone again next week. Ciao.